would say the weather's not too bad, so at least the sun is shining or was shining. So my name is Neva Perrotte. I'm a State Farm agent, and I actually started my career with State Farm back in 1992 with Amanda in the claims department. And since then, I've been to different insurance companies, lived in Ontario for a bit, and came back home to Alberta in 2007, and then opened my own agency August 1st, 2009, here in Discovery Ridge. So it's been a very good experience. I enjoy the agency side. In this office, Oliver is the office manager. We also have Sonia in the back, who is an insurance account representative, and Anna as well as an insurance account representative. We're going into our third year and moving along, as the ladies would attest to, very fast. The time flies every day. So today I'm going to talk about the first step on your journey to buying your new home, and that would be the investing side through the RSP, New Home Buyers Program. So anybody in the room investing now in the RSPs towards that goal, or?
I don't qualify for it.
Noella in the back. The reason I say that is because I know when I was in high school, my mother, she worked with the bank, and she was saying at that time you should really invest in RSPs, and the main thing was towards a new home buyers program. And I did, and I was able to buy my first home in Mississauga at the age of 26. So it's something that does work, and I've had other friends that have been quite savvy. Another friend of mine, Rhonda, she invested early, and she actually bought her first home at the age of 24. And the early you make that purchase and invest in a home, I think the better you are moving forward, and whether you see it as an investment or just something that you want to have for more space for your family. So do you want to so the agenda, so after I speak about the RSPs, I'll speak about homeowners insurance. It's very brief and to the point, the homeowners section, and then we'll do questions and answers. So start with, what is an RSP? It's something that the federal government has developed to help us create a savings plan towards retirement, and that they now, not now, but they have a feature of the new home buyers program to encourage people to be able to save and purchase that new home. Okay, so who qualifies for the program? What is a qualified homeowners program? The home has to be located in Canada because it is a Canadian program. It has to be built before October 1st of the calendar year, after the year of withdrawal from your RSP. And you have to be living in the home as a principal residence no later than 1 year after it has been purchased or built. And you can stop me as we go along. It's very informal and ask questions. You don't have to wait until the very end. So a qualified home can be existing or newly built. And it can be detached, semi-detached, a townhome, a condominium, even a mobile home or apartment building, or share in a cooperative housing corporation if you're buying an equity interest in the housing. There's a few different options for you. I know my preconception was it had to be a house, but there's a lot of different categories there. Who qualifies? You have to be a resident of Canada, and you or your spouse or a common law partner have not owned a principal residence during the past 4 calendar years. And this came up in our pre-conversation. We were talking about who would qualify and not qualify. So if you are divorced and your name was not on the title of the previous properties you owned with your former spouse, you may still qualify.
Here's your out
I'm
6 months married.
So part 2 is what are the withdrawal rules? So you can borrow up to 25,000 from your RSP. Amanda and I had
Yeah, can I, is
Yeah.
that 25,000 per person if there's two people?
we have 2 tax experts in the back.
Oh, okay.
So
Yeah.
per person?
Per
Yeah,
person.
Per person.
So if it's a couple who are both person, they can withdraw up to 50?
Yeah.
Yep, okay.
So you can touch on that and Legs.
Oh,
That's
that's all I know.
yeah, okay. No, I mean towards a down payment.
Yeah, that's
Yeah.
right, yeah.
That's good amount of money towards your down payment. And all withdrawals must be received by you in the same year or by the end of January of the following year. And any withdrawals after January may not be eligible and include your income. So it's something to review with your financial advisor as well if you're looking at withdrawing money towards your RSP, just so you don't get yourself in a situation where your withdrawal is being counted towards income, because that's not the intention of the program. And the final withdrawal,
Sorry.
the final withdrawal cannot be more than 30 days after you close. It does. I think I missed this one. Just get back in here. The next slide after that.
We just use the arrows.
There we
right
go.
now.
Yeah.
Right up and down.
A little technical.
So what if the funds were not used to buy a home? The government doesn't like that. You have until December 31st of the year you were supposed to purchase the home to return the funds to your RSP. So you're not stuck. If something doesn't work out, the deal falls through, you can still return it and you're okay. And if the funds are not returned, then it will become part of your taxable income for that year.
So if, in the case of my daughter, where her husband has the house, bought it before they got married, the house is on his name, she doesn't qualify,
Because she's using it as a principal residence.
but her name is nowhere in the title.
That rule only applies if they get divorced.
Because there's something called dower rights, and Mary maybe could even speak to it. So if something happened, even if, once they're common law, not even, yeah,
We,
then,
yeah, the
yeah.
woman takes up, we know.
Yeah.
Oh, no, no.
So that's why, yeah. That's why.
So once you withdraw the money, you do have to be on a plan to pay it back to the RSP, because the whole intention is that it's being used to save for your retirement. So you must pay what you borrowed back within 15 years, and it's a very straightforward calculation. Whatever the full amount is that you borrow, you divide that by 15, and that's generally how much you're supposed to be paid back on an annual basis. And repayments are not considered RSP contributions and are not tax deductible. And just as far as paperwork from Revenue Canada, they'll send you a statement of account home buyer's plan, and it'll outline your scheduled payments and how much you paid and how much you're owing. And this is just a quick calculation, but very straightforward as far as, but it gives you an idea of, I wanted to do this as well to give you an idea of what your monthly payments would be if you're paying back to an RSP, rather than paying back perhaps to a loan where you're paying interest and things are building up every year. And this is, if you